Varsha, good evening, dear.
Good evening.
Varsha, fundamentals is clear to you? Have you started
Yes,
practicing, dear?
ma'am. Yes, ma'am. I started, ma'am.
Okay, fine. So now we will go.
Ma'am,
Yes. Tell
did
me.
my father say, ma'am?
Yes, dear.
Ma'am, did my father send you the screenshot, ma'am?
Yes, yes. He sent me, dear.
Okay.
Just now
Okay,
I
ma'am.
saw and I
Okay.
replied. Yes, yes. He has sent me, dear.
Okay.
Yeah.
Okay.
Yeah, fine. So now we are going to see how to solve this question. Page number 8. Take page number 8.
Okay, ma'am.
So average profit first year, there is no adjustment. Whenever there is no adjustment given, no need to worry, just copy the profit as it is. 4 lakh, no adjustment. So same will be written. What about the second year? 14, 15, 5 lakh. Again no adjustment in the second year. Write it as it is, 5 lakh. What about the third year? There is adjustment in third year. We have to adjust it. How we will adjust? 3 lakh. Out of 3 lakh, you have to deduct two amounts, 60,000, 70,000. So add these two amounts and deduct from 3 lakh. You will get the actual profit 1 lakh 70,000 rupees. Then 16, 17, no adjustment. You have to write the same. 1 lakh 50,000 is the actual profit. Write it as it is. What about 17, 18? Yes, there is adjustment. 2,50,000 is the profit, but we have to adjust the profit. Adjust means this 80,000, that is the abnormal gain, tax refund. We have to deduct from the profit. So, from 2,50,000, which is the actual profit, you have to deduct 80,000. You will get the correct profit 1,70,000. Now what you will do, in order to calculate the average profit, you have to make sum total of all these profit. 4 lakh plus 5 lakh plus 1 lakh 70,000 plus 1 lakh 50,000 plus 1 lakh 70,000. First make sum total of all these profits. Divide by number of, how many number of years profits are given? 1, 2, 3, 4, 5. Divide by 5. So if you make sum total of these profits, it will come to how much? 13 lakh 90,000 you will get. Divide by 5. So average profit you will get 2 lakh 78,000. This is the average profit. Now what you have to do? You have to calculate the goodwill. For goodwill, what is the formula? Average profit into number of years of purchase. Average profit we have calculated. Now put the formula and calculate goodwill. So goodwill equals to average profit 2,78,000, already we have calculated, multiply by number of years of purchase given in the question 3. Multiply by 3, you will get the goodwill. 8,34,000 is the total amount of goodwill. Any doubt in this question, Roshni, Varsha, any doubt you are having, dear, in this question?
No, ma'am. No, ma'am.
Okay. Now we will move to second question, page number 9. This is also average profit method. One more question. A and B are partners sharing profits equally. There are two partners in a partnership firm, A and B. Both of them share profit equally. Share profit equally means if the firm suffers loss, the loss will also be shared equally. Don't get confused. But the question says sharing profit equally means for losses also the same ratio applies. They agree to admit C for equal partners. So C, he is a new partner. A and B decided to admit him, means to make him as a third partner. And for how much share he is coming? He is also coming for equal share. So the ratio will be 1:1:1. This is the ratio. Okay. Kirtika, take page number 9, dear.
Okay, ma'am.
Yeah. For this purpose, goodwill is to be valued at 150% of average annual profit. As I told you, when we calculate goodwill, if any partner, any new partner is coming into the business. So here C is a new partner. C is going to come into the partnership business. He is the new partner. So we have to calculate goodwill. And they are saying that goodwill is to be valued at 150% of average annual profits. So average annual profits you have to calculate first. Then you have to multiply by 150. 150% is given. So then annual average profit of the last 5 years, profit is already given in the question for the 5 years. 31st March ended. All obviously we calculate profit at the end of the financial year only, 31st March. So 2015 31st March 40,000 is the profit. Again 31st March 2016 60,000. 31st March 2017 1 lakh. 31st March 2017 firm has earned profit only 1 lakh. 31st March 2018 firm has suffered loss. Whenever you see any amount written in bracket, it shows loss only. 20,000 is the loss. Then again 31st March 2019 1,50,000. Additional information during the year ended 31st March 2016. Again, whenever you find the date, just see in which year this date falls. For seeing this, you have to understand when this year will start. 1st April 2015. The year will start from 1st April 2015 and end 31st March 2016. Okay. But here only the ending date is given, that is 31st March. So 31st March 2016, this year only, 31st March 2016. What has happened? An asset of the original cost of rupees 2 lakh with book value of rupees 1,50,000 was sold for rupees 1,24,000. What is the meaning of this? Original cost means the firm has purchased the asset for how much? 2 lakh rupees. That is the meaning of original cost. The purchase price, that is only original cost. Book value of rupees 1,50,000 means, book value means whenever firm purchases any asset, every year from the date of purchase till the date of sale, we have to charge depreciation. Already you must have learnt in class 11th, depreciation chapter. So from the time any asset comes into the business, firm starts charging depreciation till the asset is sold. That is why book value means after charging depreciation, whatever the value of the asset is there, that is only book value. Whenever you find book value means already they have charged depreciation. This is the simple meaning. So now what is the book value? 1,50,000 means 50,000 is the depreciation. Was sold for rupees 1,24,000. What is the meaning of this? Now the value of the asset is 1,50,000, but it was sold for 1,24,000 only. So the asset has been sold for loss. Till here you are able to understand the question? Yes? Amrita, Kritika,
Yes,
Roshni, just try to understand the question first. So what they are saying? They are saying that the
could you again explain the first additional information?
Yes, Amrita. Yes. So the original cost of the asset is 2 lakh. What is the meaning of original cost? Cost price of the asset. Purchase price. In simple, you can understand the amount paid by the firm to purchase the asset. It is only original cost. It is given 2 lakh rupees. With book value. Book value means the depreciation has been charged on the asset. After deducting the depreciation, the value of the asset is 1,50,000. Whenever you find book value means they have already charged the depreciation, deducted the depreciation. Then the value comes 1,50,000. On the date of sale, the value of the asset is 1,50,000. But business is getting only 1,24,000. So business is selling the asset for loss. How much loss the business is selling the asset? Can you tell me? 26,000 is the loss. Okay, 26,000 is the loss. How you will do this question? The same format only. First you have to prepare the adjustment table. Whenever adjustments are given, you have to make this adjustment table. Then you will write particulars. Then the number of years given 2015, 16, 17, 18, 19, 31st March. All these years are given. Profit or losses given in the question, write it. 2015 40,000, 2016 60,000, 2017 1 lakh, 2018 20,000 is the loss. So we have to write in bracket. 2019 profit 1,50,000. That's it. Then this 26,000, that is the first adjustment. It is the abnormal loss, because whenever you sell any asset and any loss is happened by selling the asset, that loss we will write in the debit side of PL account, and this reduces the profit. And as I told you, when we calculate goodwill by using average profit method, we don't take abnormal loss or abnormal gain. That is why we do this adjustment. In order to know the correct profit, you have to add back this abnormal loss. So which year you will add? 2016, because the asset has been sold on 2016 only. So that particular year you have to write the loss. Add back 26,000. And nothing has happened in any year so far. Now we will go for next adjustment. Again another adjustment is given on 1st April 2017. So what has happened on 1st April 2017? Two computers costing rupees 1 lakh. Whenever you read computer, land and building, plant and machinery, automatically it should come that these are assets. These are not the goods. These are the assets. Okay. So two computers costing rupees 1 lakh were purchased. So assets are purchased. They are talking about assets. Two computers worth 1 lakh purchased and were wrongly debited to traveling expenses. Okay, I will do one thing. This will take lot of time because you should know the difference between capital expenditure and revenue expenditure. We will continue in the next class. I will give a detailed explanation about what are capital expenditures and revenue expenditures. Once you understand that concept, then only you will be able to differentiate, make difference between capital and revenue expenditure. Okay, without knowing that, it will be difficult for you to do this. Okay.
Okay, ma'am.
Okay.
Okay, ma'am.
Okay, so in next class we can understand this, then solve the question entirely. Okay, thank you. So far whatever I have taught you, please practice, dear. Please, it's a request. Don't leave like that. Okay, only listening is not at all sufficient. You are account student, right? You need to practice. Listen only in my class. After the class ends, start practicing. Okay.
Okay, ma'am. Yes. Okay, ma'am.
Okay,
ma'am.
thank you. Thank you, dear.
Thank you, ma'am.
Thank you, dear. Thank you.